You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast.
All right, welcome back, everybody. Welcome to another episode of the Young Investors Podcast. Brandon, how are you feeling? You've done a lot of travel recently. You went to Melbourne, you went back. And now you're in Canberra at the moment, I think, and then you're going to go back to Melbourne. Yeah. You're going to come back to Melbourne. How you feeling?
Yeah, we're going, I guess this podcast will come out too late, but we are going on Friday to a Rask Australia event in Melbourne. Both myself and Hamish will be there in attendance. It's going to be good. But there's just so much going on at the moment. Like, I think I've made 4 videos in the past 5 days or so.
Yeah, wow.
And then we've recorded one podcast today already. We're recording another one now. I went to Melbourne last week. I'm going back to Melbourne this week. It's just a hectic time of the year. Claude goes on leave at the end of this week. The other boys go on leave at the end of next week. Claude's fist pumping right now. and we've just got to get everything ready to go.
Yeah.
And it's just a very big effort, but we're getting there. How are you going?
Yeah, I'm doing well. Yeah, the end of the year is always just chaos because we want to make sure that we have some content going out so that we can have a break, at least for some small length of time. And it can be difficult because a lot of the time throughout the year you're operating at you're trying to put out as much content as possible. So to add on top of that scheduled content, there's usually not time to do so. It can be very difficult. So it is a bit of a chaotic end of the year, but it's always an exciting time of the year. Hopefully the weather kind of picks up a little bit. It's been terrible in Melbourne still, so I always enjoy a nice hot summer. So hopefully
apparently summer's falling on a weekend this year, so that'll be good.
Yeah. Can't make that joke again. You made that joke a couple episodes ago.
Did I? Damn it. I thought I couldn't remember if I'd already made that joke.
Yeah.
There you go.
No, anyway. But it should be an interesting podcast today. We've got some updates around not the Fed, but the central bank in Australia, the RBA, and what they've decided to do and how that impacts interest rates and mortgages. I got a little story about HBOMax is changing their name. So we'll talk about that. What else have we got? What have you got?
I'm talking about FTX a little bit, and the House Financial Services Chair doesn't plan to investigate Sam Bankman-Fried before the hearing. Anyway, I'll talk about that. I've also got a little story on COVID lockdowns ending in China, potentially ending, which would be good for the rest of the world. If we get a chance, we'll talk about the Tesla semi-truck event as well, because that happened, I think, over the last week or so. Did I talk about that last week, Hamish? I don't think so.
Maybe. It does sound familiar. Yeah, you might have. I don't know.
Hang on. I'll while you're reading the sponsor clip, I'll make sure that it did actually happen this week. I'm not repeating myself.
Yes. Regardless.
Lots to talk about.
Today's episode is sponsored by Sharesight, which is an application you can use to track the performance of your stock portfolio. So you can bring in all of your trades either by connecting to your broker and doing it automatically, or you can download your trades using Excel, or you could enter them in one by one. However you want to, you can bring in your trades. It's super easy. And once you do that, it will track all the types of gains and losses in your portfolio. So capital gains, dividends. If you have dividend reinvestment plans, it will do those calculations for you, which is a lifesaver when it comes to tax time. Currency gains if you're buying shares internationally or you hold foreign currencies. And then there's a bunch of reporting that you can get access to depending on the different plans. There's different number of different types of reports you can get access to that help you with tracking the performance of your portfolio, as well as at tax time to work out things such as capital gains, dividend income, and more, things like the diversity of your portfolio. At the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That's site spelled SIGHT, sharesight.com/young investors. So use that link. You can sign up to a free plan. You can track up to 10 different holdings, so 10 stocks, ETFs, that kind of thing. 10 stocks, 10 holdings for as long as you want. So it's a free plan. Check it out if you're interested. But if you want to sign up for full reporting and benchmarking and that sort of thing, you can also get a premium plan and you'll get 4 months off if you use our link. So 4 months off a yearly subscription. So go check it out if you're interested. And as always, thanks to everyone who uses that link when signing up to Sharesight. and is, of course, helping to support the podcast.
Yeah, definitely. All right, Hamish, where do we begin?
Where do we begin? I'll start with this short one about HBO because it's a
Yeah,
relatively
what the hell's going on here?
Yeah, so it's a relatively short story, and it's also a bit of a non-story because we've known Warner Brothers Discovery, of course, is the kind of the spin-off and merger of those two kind of film studios and a bunch of the smaller film studios within them. And previously, they've announced that they're going to be combining essentially their HBOMax streaming service and the Discovery Plus streaming service into one kind of big glob, which has not only Discovery and HBO, but a bunch of exclusive Warner Brothers content like DC Comics and other stuff such as their CNN exclusive programming. After they launched a CNN Plus on its own, and it didn't do very well. It ended in I think it was 6 weeks or something. Is how long it lasted.
Yeah. It didn't last long, did it?
So they've got all of these they've got all these. I shouldn't say little. They're all large, but they've got all these film studios and TV networks that they're just going to kind of lump it all together. And we've known that for a little while, but what we didn't know was what the name was going to be. I kind of proposed that they should call it, it's not really a proposal, but I thought maybe they'd call it Warner Plus. I always thought that they would use a name, at least to reflect one of the brands in the portfolio, to use some of the IP that they have. But it doesn't seem like they're going that way. So it seems like they're going to go with Max. That's it, Max.
What Max? Max what?
Max. Just Max.
Max.
Yep.
I have a friend called Max.
Yeah, exactly.
Seriously,
I'm wondering, is there someone on
Pepsi
the board?
Max?
Yeah, is there someone on the board with the name Max? No. So the thing is, it's just the chairman's name's just Max. Yeah, we should call it Jason. Yeah, it's a great idea, Jason. No, but
that's funny.
But
right, Max. Okay, sure.
Why this is a bit of a non-story is because it hasn't been officially announced. They haven't come out and said it's going to be called this, but it's kind of rumored, and there's what do they say? According to people familiar with the matter. So
no, of course, allegedly,
it's allegedly this is the name that they've settled on, which in my view is kind of. I think it's them kind of leaking it a bit to see what the reaction is, and then they can change it if people hate it. But essentially, yeah, as I said, that'll be the combination of HBO and Discovery. And the idea here is to combine the content libraries to boost sub numbers. So, getting people to subscribe to it rather than kind of separating them out in order to reach profitability, which is now their number one goal, as is the case with a lot of streaming services. So, yeah, what do you think? Max, good name, bad name?
I think it's a little silly.
Yeah.
They've just ditched branding, all their branding. I don't want to steal your points. I can see your points ahead, but I think we feel the same way on this.
Yeah.
It's it doesn't, imagine Disney Plus was just called Plus, You'd be like, huh?
Yeah.
I don't know. Imagine if Netflix was just called Pro.
Yeah.
Or something.
Well, sorry, I don't want to interrupt you there.
No. I don't know. I just feel like it's a missed opportunity.
Yeah, and
I also feel like, sorry, I'll add one more thing. I also feel like what are the brands in this? HBO, Warner, Discovery, CNN,
yeah,
others
DC Comics,
as well.
yeah,
okay, so there's that kind of stuff. I feel like for the person that doesn't really keep up to speed with this, and you go, oh, what's that subscription service? Oh, yeah, Max. And they're going to go, what's on it? Yeah. And then they'll either say, oh, it's the Warner or they'll say, oh, it's the HBO. But they won't say, oh, it's the one with HBO, Warner, Discovery, CNN. It's they're not going to say, they're just going to be like, oh, it's just, you remember HBO? Yeah, it's that one now.
It's kind of odd because all of these companies have obviously you have the Walt Disney Company or Disney, then you have Warner Brothers, and then they're trying to name this new offshoot of their brand, whereas then you have just Netflix, that is their brand. They don't have to be Netflix Plus. In a way, I would almost prefer if they just named it Warner Bros or something. Just name it the name of the what it is. But then their argument against naming it HBO and getting rid of HBO is that they don't want to dilute the HBO brand, which has this very high, highly viewed brand of like very limited but high quality content that they produce, television content, and they didn't want
Is Game of Thrones HBO?
Yeah. So so Game of Thrones, Succession, there's a bunch there. I think The Sopranos and that sort of thing. So for a very long time, they've had this massive brand of making very high quality shows, and they didn't want to dilute that by calling a streaming service that has kids programming and Discovery programming and all of this other stuff. They didn't want to dilute the brand, which I kind of get, but I also just hate the name Max. I think it's terrible. And yeah, my kind of other thoughts on this are, I think theoretically combining assets and giving people a bigger library makes sense, but the extra content that people are getting access to has to be desired by them. It's not just a matter of having more content. Sure. It's about having a larger content library that actually adds value to the subscriber. And on that side, I'm not sure how this will play out, because I presume they're going to have to raise the price of the service because it's going to be all of their streaming services combined. So I presume if it's everything, maybe it's going to be a fair bit more expensive over time, not immediately, but over time. And that might make it more difficult for them to pull the casual viewer who sees, House of Dragon is out. I know that's going to be great. Am I really going to, if it's like $30 a month, am I really going to pay $30 just to watch one series? That's where I'm not quite, sure on the consolidation side of things. If it's just consolidating a bunch of old legacy assets, essentially, that people might not love. But who knows? We'll have to see how it plays out. We've certainly seen it work with Disney. Has been able to consolidate a significant amount of their film studios. So we'll see.
Yeah, on that point you were making before, though, Disney definitely ran into troubles as well early on because they just relied on their prior content library. And so people signed up for Disney Plus, and then they watched all the, you remember that old Disney film? Oh, yeah, we watched Snow White or Cinderella, or you watched Toy Story or something like that. But after that, there was not like a massive slate of fresh new content. I remember when they launched, they maybe had like 5 shows. They had The Mandalorian, they had like Jeff Goldblum was doing a show, they had like 3 other like flagship new shows, but then they were just kind of relying on everything that had come before in terms of Disney, which is a massive library. And sure, if you're a big Disney fan, you could just chew through that for forever, but it's about the new stuff, and that's what caught them out. But yeah, it's definitely about the fresh content. But yeah, it's a weird strategy, this one. I don't know. I mean, we'll see what happens, I guess. I don't have any. I don't know the space very well, so I don't have a strong opinion. Like you probably have a much more reliable opinion on this than me, but it will be interesting to see kind of how it plays out. I mean, obviously Warner Brothers owns some massive film studios that produce some very good content that will go through the theaters and then come exclusively onto their platform, at least for some kind of short window. So I'm sure they'll do reasonably well over time, but they're doing this at the same time as cutting content spend on original content. And I kind of hold the same view that a lot of the value in these streaming services to stay subscribed is the fresh new content that's coming out. But maybe especially when discretionary spending is low.
Exactly. So
people are looking to cut costs in their lives.
Yeah. I think definitely over the next year or so, and we've started to see it a bit with streaming growth slow down this year, but certainly over the next year, I think it'll be interesting to see what people decide to keep and cut as these platforms try and get profitable. So they're raising prices or consolidating and doing all these things. How do customers kind of react to that? They also push back the launch date. So the launch date's going to be spring 2023 now, which spring for US would be autumn for us. So, the beginning of the year, but not as it was going to launch at the beginning of 2023. In the meantime, other HBO news, they struck a deal with Amazon to add it to Amazon Prime Video subscription add-ons, which a bunch of companies have that kind of a deal with Amazon where you can subscribe to Paramount or whatever within Amazon.
Smart.
And just kind of reinforces Amazon's goal of being the one-stop shop for everything, shopping, entertainment.
Basically everything,
So that was interesting. And just a side note while we're talking about streaming, this is not really related to HBO, but there's a new series on Netflix that came out 2 weeks ago, Wednesday, and it didn't come out on Wednesday. The show's called Wednesday, by the way. And it is already the third most watched streaming series of all time. So big hit there.
What's it about? I have no idea.
It's about the Addams Family. Really good series.
Okay.
I actually, I wasn't sure it was going to be something that I'd be into, but I started it like 2 days ago and I finished it in 2 days. So
Really? Okay.
it was pretty good. Yeah, I would highly recommend.
Interesting.
Yeah.
Your non-biased opinion.
Yeah, completely unbiased.
Said like a Netflix shareholder.
Yeah, if you're not subscribed to Netflix, consider, subscribing to the maximum plan with multiple different emails. Just,
Multiple emails. That's great. Okay, cool. Is that's HBO?
That's it.
Sorry, don't say that. That is Max.
Yeah, that's Max News. That's Max's news.
That's Max News.
Yeah.
Young Investors Podcast, Max News all the time. All right, should we move on?
Yeah, what do we got?
House Financial Services Committee Chairwoman Maxine Waters told Democrats she doesn't plan to subpoena former FTX CEO Sam Bankman-Fried to testify at Tuesday's hearing about the crypto exchange's rapid demise, according to people with direct knowledge of the conversation. Waters informed committee members of her decision at a private meeting on Tuesday with Securities and Exchange Commission Chair Gary Gensler on Capitol Hill, these people said. So those at the meeting say Waters said this is quite a poorly written article, to be honest. Those at the meeting say Waters said she wants committee staff to try to convince Bankman-Fried to voluntarily testify, those with knowledge of the meeting said. As of late Wednesday, Bankman-Fried has yet to agree to voluntarily testify to the House committee, two of the people explained.
Why would he do that? Why would he voluntarily go and testify? I mean, yeah.
I'll get to it, but he might just do that.
Oh, okay.
But yeah, you're right. You feel like his lawyers would be like, no, dude, damage control.
Don't speak. Yeah.
Say nothing. Don't speak unless spoken to,
Yeah.
Which is kind of weird because he's kind of taken the opposite approach so far, like doing interviews and stuff. But I don't think he's been particularly good in the interviews. Did you see that CoffeeZilla got to him on an interview?
Yeah.
And asked him like a really hard-hitting question. I don't know. I can't remember. They're chasing like $8 billion or something of unknown money. Where it went, who knows?
Yeah.
But CoffeeZilla asked him about it. And he just went around and around in circles saying absolutely nothing. So chucked in the classic. Oh, look, like I would like to say that we need to obviously follow that up, and we need to look into that. And I'm in trouble.
Yeah, it is just kind of crazy that that he hasn't been charged. I guess it's a complex. I guess it is complex, so maybe they're building a somewhat of a case first before they go ahead and do that. Yeah, you would still expect that they would be. I mean, I think Bernie Madoff was charged immediately after his Ponzi scheme collapsed. So, maybe it was a bit more clear cut with that case, but seems pretty straightforward to me.
Yes,
I know, of course, you have to kind of prove intent for fraud, but surely it is still a crime to be negligent with $8 billion. I mean, a lot of people are making the argument that he was just, it was just a mistake. Like he just got over his head. But even if it was an accident, I mean, that surely mixing negligence, client funds with another company that you own and losing billions of dollars, that has to be a crime.
Definitely. Well, you think about another area like medical negligence. Yeah. Okay, sure, somebody might have a practitioner might have made a mistake. Maybe they were really tired. They prescribed the wrong medication or something. But they'll still get in trouble. Like medical negligence is a thing. They'll still get taken through the courts. They'll have to pay for damages or whatever. So I imagine the same thing would apply. I really don't. I'm not a lawyer, so I really don't know the word of the law that well. But yeah, you definitely imagine if somebody, like even just the stuff about them not having like a solid management team and managing that amount of money, like that's negligence, surely.
Yeah, I mean, because at least in Australia, I presume it's similar in the US. You have directors' duties. You have things.
Yeah.
You have to be on top of your financial statements and all of these things within the company. There's kind of a certain base level of understanding that if you're going to be a director, you have to be able to meet these things. And yeah, it does just seem kind of crazy, the whole situation. But I guess it's going to be one of these bloody 6, 8, 10-year cases.
Yeah, it'll be long.
Same as
but it'll get worked out.
Yeah.
I think he's definitely made some big mistakes, though.
Oh, yeah.
It says here, Bankman-Fried has been under scrutiny by federal investigators and lawmakers on Capitol Hill since his cryptocurrency exchange suddenly collapsed last month, bringing to light a host of questionable transactions. Correct. Senate Banking Committee Chairman Sherrod Brown announced that his committee will hold a hearing on FTX's implosion on December 14th. The company's crash arrived after FTX reportedly transferred billions of dollars in client funds to Bankman-Fried's trading firm Alameda Research. Interestingly, though, this is what I was getting at before. Bankman-Fried tweeted his answer to Waters, saying that he felt it was his duty to explain what happened, although it might not happen next week. John J. Ray III, that's a great name, the new FTX CEO, is scheduled to testify at next week's House hearing. So Sam Bankman-Fried said, quote, "Once I have finished learning and reviewing what happened, I would feel like it was my duty to appear before the committee and explain. I'm not sure that will happen by the 13th, but when it does, I will testify."
Right.
There you go. What do you take from that? You reckon he's going to do it?
I guess maybe. I have no idea.
What's your opinion of Sam Bankman-Fried? My vibe that I get from him, again, I'm not I've never met him. I don't know the guy at all. My vibe is that he's probably not that great of a person, but he is very aware of his public perception and reputation.
Yeah.
Like the amount of money he put towards marketing and like news articles to be written favorably about him. Some of the YouTube videos where he agreed to collaborate and they were like, this guy is the most generous billionaire I've ever met. I actually think he's probably like a pretty dodgy guy that is just like money hungry, kind of trying to get as high as possible. But I think he's just good. I think he's just very good, and he knows like how, like when he's in the public eye, he's always like, "Look, I'm really sorry. I've had a bad month. I'm really trying to, be as open, as honest as I can about everything to you guys." But I think in the back of his mind, he's just trying to, manipulate people's thoughts about him.
Yeah, he's trying his best to come off as someone who just got in over their head and made a mistake, but that's not the what I see. I think it's very likely that he knew, considering it was such a small team as well. I think it's very likely that he knew that funds were being mishandled by FTX and the other company that he owned, Alameda, that both had offices in the same building. I think it'd be very difficult for you to convince me that he had absolutely no idea that was happening. And just some of the
He's
answers.
not a dumb guy either. He's not a dumb guy. Like before he did FTX, he was like a high frequency trader on Wall Street. Like he knows what he's doing. Yeah. He knows what he's doing. He's not stupid. So
yeah, I think we'll see. I guess once they start to subpoena documents and files and that sort of thing from FTX, we'll probably get more. Hopefully, we'll get more clarity on maybe what he knew through emails and other kind of communications between who was working there. But it sounds like CoffeeZilla has already spoken to a couple of Alameda people who worked at Alameda who have said that Sam absolutely knew what was going on. So it'll be a very interesting case, but it's going to be slow. It's going to be the same as the Theranos, which started in 2014 and ended in 2022. That's 8 years. So, when we're doing episode whatever we'll be up to then, 10,000 of the Young Investors Podcast.
382. Look out for it. Episode 382.
382. So
that'll be when. It's probably be longer than that, to be honest.
Yeah. It'll be a while, but it will be interesting to kind of see how it plays out. But I'm very surprised that he hasn't been arrested yet. It's kind of crazy.
Yeah, there you go. So we'll see what happens there. Oh, actually, on a related note, hey, this is kind of funny. This is a quick story. I just chucked this in because I found it quite interesting. Just 8% of Americans have a positive view of cryptocurrencies now, CNBC survey finds.
Wow, it's still that high. Wow.
It's still that high. After a series of crypto collapses, scandals, and bankruptcies, Americans' views on cryptocurrency have soured sharply, with the CNBC All-America Economic Survey finding a majority favoring strong regulation. The survey shows 43% of the public with a negative view of cryptocurrencies, up from 25% in March. That's quite a jump.
Yeah.
But a lot's happened since March. A lot of bad stuff's happened since March.
A lot of people have lost money since March. So.
The percentage with a positive view plummeted to just 8% from 19%. And those who fell neutral fell almost in half to 18% from 31%.
Okay.
So there you go. People definitely shifting towards the negative opinion of cryptocurrencies now, which is interesting.
A more accurate prediction of cryptocurrency.
Yeah. Although, to be fair, I would wonder if you did the same, if you overlaid the price chart of Bitcoin or cryptocurrency, some sort of cryptocurrency index, and you watched, okay, when it's going up, sentiment's favorable, when it's going down, sentiment's not favorable. I wonder if you did that with real estate or with stocks, whether you would get exactly the same conclusion.
I think you
would. A couple of years ago, stocks crushing through all-time highs. Hey, what's your opinion on the stock market? Oh, it's fantastic. Yeah, really, I put my life saving. Yeah, you really got to be in on it. And now the stock market's crashing. What do you think about it? Oh, no, it's so risky. I wouldn't touch it with a 10-foot pole. I wonder if that's the same.
Yeah. Oh, it 100% would be the same. There's absolutely no doubt about it.
I think it might be a bit more extreme with crypto.
Yeah. I could definitely see that. I mean, were we doing a sponsorship for
Max? No, this is Max. Yeah. If you just take this away, this is HBO's new streaming service, everybody.
Yeah. Max.
I wish we were sponsored by Pepsi. Sorry. Off topic. What were you going to say?
I can't even remember where I was going with that. Yeah. No, it's all right.
I just saw Max. And I was like, oh, there you go.
Actually, that's what I was going to say. It is interesting because, I mean, at least when stocks go down, you can find a fundamental reason to be confident in them long term, but you really can't do the same thing with cryptocurrencies because there's no cash flow. So when they're down, I see a lot of people being like, "Oh, this is blood in the streets," or the classic investing phrases. It's time to get in, but it's like, well, yeah, they've come down a lot, but how do you know that it's going to go back up? I mean, to me, it looks the same as a highly speculative stock that's not profitable. Yeah, it might have come down 80% because it was all hyped up, and now it's dead. But that doesn't mean that it has to go up. Not every stock goes up. Not every cryptocurrency goes up. So unless you have some fundamental reason to be confident in it, I don't see how you can have that view on cryptocurrency. So. But we will see how it plays out. We'll wait and see.
Yep. That's all I had on that story.
Yeah.
Hang on. No, is it all I had on that story?
There's more.
No, I don't think so. No.
Okay.
Blah, 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 blah. Popularity attracted many. The popularity of crypto attracted many ordinary Americans to the space, and the survey shows 24% of the public invested in, traded, or used cryptocurrency in the past, up from 16% in March. So actually more people have either used or invested in crypto since March, but that's the last stat that they kind of quoted.
Right.
GG. All right.
GG.
Where to
Let's
next,
talk about,
Hamish?
Let's talk about the RBA. Made a decision on interest rates this week. So they decided.
If I threw a stone, I could basically hit the RBA building.
Oh yeah, yeah,
from where my office is. Yeah.
Go see Mr. Philip Lowe. Ask him why he promised that interest rates wouldn't be going up until 2024. Yeah. Why did he do that?
Yeah.
No, but so the official cash rate is now at 3.1%, which reflects a 0.25% increase. So RBA has been pretty consistent at those 0.25% increases. We've done more rate hikes than the US, but smaller ones. So our official cash rate is a little bit lower than the US, but is kind of been going up consistently. In the statement, Philip Lowe, the governor of the RBA, basically indicated that the reason for the hike was that inflation is still too high, which is pretty self-explanatory. Inflation, which the last figure we got was last month, the month ending October, reached 6.9%, which was down from the end of September, which was 7.3%, I think. So it was a little bit of a decline. However, in this press release, the RBA expects that inflation will accelerate again and reach 8% by the end of the year. So even though there was kind of one down month, we're not expected to track the same as the US, where the US has had 4 down months in a row, where we've had one down month, and now towards the end of the year, we're expected to still accelerate, which will be interesting because Australia up until now has had lower inflation than the US, quite a fair bit, and therefore we've needed smaller rate hikes. But if that rings true and the US stays where it is, relatively speaking, or maybe even continues to decline, then Australia will certainly be higher than the US in terms of inflation. So that's kind of an interesting dynamic. The RBA still thinks that long-run inflation will be over 3% by the end of 2024. So, their next couple of year targets says that inflation is going to continue to run relatively hot. Of course, what do you think the major banks did given this rate hike? Do you reckon they passed it on to the customer? Do you reckon they ate that cost themselves?
No, they ate it because they're nice and they want to make sure that everybody's doing it tougher this Christmas. So they just wanted to make sure that they gave their customers a little Christmas bonus, a little nice thing to help out with the family budget.
Yeah, that would be nice.
Am I right? Hamish? Am I right?
No, not quite, unfortunately. They did decide to pass it on in full to customers, as they always do. So now an owner-occupied variable loan averages 5.45% in Australia, and a 2-year fixed rate is 5.8%. Both of those are up from about an average of about 2.5% in the middle of 2021. So they're continuing to rise slowly. 0.25% on a $500,000 25-year mortgage represents an increase of $75 per month. So pretty considerable for just a 1 monthly increase. $75 is quite a bit for just month-over-month increases if you're on a variable rate. But what's kind of crazy is since May, so only a few months, payments have gone up $800 per month.
That's quite rough, isn't it?
Which is kind of astounding. How
that's really quite a lot,
especially given interest rates are still quite a bit below the long run average in Australia, which has been about 5 to 6%. That's currently at 3%. So it's only
and that's on a mortgage of $500K.
Correct.
Like, yeah, sure, maybe, I don't know, is that maybe that's the average, but I'm thinking like a lot of people, just to get into the housing market, particularly if you're in Melbourne, Canberra, Sydney, over the last couple of years, you've had to fork out a lot of money. Like median house price has been like 1.1 million.
Yeah.
So chances are, especially if you're young, chances are most of that is probably mortgaged. You probably wouldn't have like 400-500K in savings. You might have 200, say, to like avoid, I don't know, LMI or something. But that's like 834. That's on a 500K mortgage. It's going to be even more if you have an $800,000 mortgage or $1 million mortgage. That's crazy. And so like some of these people have just done it. Like young people have just done it because they feel like that's what they needed to do just to get into the housing market. Yeah. Crazy. Yeah. And the RBA's been, as I kind of alluded to before, RBA's been under a lot of pressure recently because it was only a year ago that Philip Lowe, head of the RBA, essentially almost basically promised that there wouldn't be rate hikes until 2024. He didn't exactly say that, and there was a lot of caveats in the speech that he gave. But he essentially said that there's, from the modeling that they have, some of their models showed rate hikes in 2024 and other models showed no rate hikes. That's pretty much what he said. And of course, that has not played out, as we know. He's come under a lot of scrutiny in the media lately, hasn't he?
Absolutely. And, as we know, economic conditions can change so quickly. So even whatever the central bank thinks now may not, come true. And that's pretty much what's played out. But yeah, Lowe, I think it was last week or maybe the week before, came out and actually apologized if people had listened to their statements and then made decisions and now kind of regretted those decisions. And really, I think one of the key reasons why they are apologizing about it now is because they've stated that they're continuing to expect to do rate hikes. So yes, rate hikes have gone up a lot. And there's quite a lot of scrutiny now of people wondering why do we have to do this? But they are indicating that they will continue to do 0.25% rate hikes to get inflation under control, which, as I mentioned, is still going up, is still accelerating. So as unfortunate as it is that mortgage payments are up, hundreds of dollars per month or thousands of dollars per month already, it doesn't look like it's the end of it just yet, unfortunately.
Yeah, rough. Do we have anything else to add on that?
Yeah, we also got home prices for the monthly update for how home prices are looking in major cities around Australia. Sydney was down 1.3% in November. Melbourne was down 0.8%. Brisbane was down 1.8%. And in total now, over the last year, Sydney is down 10.6% and Melbourne down 6.9%. So they've come off considerably. The concern is that this is what we're seeing with variable loan mortgages, which have of course already seen increases in mortgages, but a lot of the very low 2-year fixed rates that were written in 2021 will roll over next year. So that's where the big concern will be if interest rates kind of remain where they are or continue to go higher. There's going to be a lot of people that
flood of variable
experience those rollovers. Not this year, but next year.
Because that's just what, for those in America, that's just what happens in Australia. Like most fixed rates are at 2 to 3 years. Yeah. We don't have 10, 20, 30 fixed home loans.
Yeah.
I wish. That would be nice.
Yeah. There was a stat from ABC did a report on this between February of 2020 and February of 2022. So over a 2-year period where rates were really low, 1 million mortgages were written in Australia.
Wow.
Which our population is 27 million.
26
million. Yeah. So, a little bit lower than that. So, that's
a lot of mortgages.
That puts it in perspective. It's an astounding amount of mortgages that were written. A lot of them were potentially refinances, so people can stomach them going back up to where they were previously. But still, that's a lot of people that took the opportunity to take on new debt or something in that regard during that period. So, yeah. There we go.
Interesting.
That's my happy RBA news.
Woohoo! Go the Australian markets. All right, let's talk about COVID lockdowns potentially ending in China. That would be big news, wouldn't it? China dropped many of its quarantine and testing requirements and curtailed the power of local officials to shut down entire city blocks as the government accelerates plans to dismantle zero COVID controls in the wake of nationwide protests. The speed of Beijing's retreat from its pandemic regime suggests the country's leaders are now more concerned about the damage to those those controls have caused to China's economy than the risk of worsening COVID infections that surged to a record high in November. Trade data released before the COVID easing measures were announced on Wednesday showed Chinese exports fell at the steepest pace in more than 2 years in November, adding to weakening factory activity and sluggish recovery in the property sector. So very, very interesting. They are now starting to turn the other way around on their policies. It says Chinese leader Xi Jinping and other senior officials have repeatedly emphasized the need to maintain the zero COVID policy and criticized the West's approach of living with the virus as showing disregard for lives. But the official tune began to change last month after signs of economic and supply chain disruptions again emerged and protests erupted in dozens of major cities. COVID-related disruptions at the world's biggest iPhone assembly plant led Apple to question whether it can rely on China as its biggest manufacturing base. Health officials and state media have recently suggested it is now possible to relax controls, citing new research showing the latest strains of the virus are less deadly, though they spread more easily. Better techniques to control and treat COVID mean China can apply more nimble and precise measures to have less of an impact on people's lives and on economic activity. So, interesting. It seems here that like, I don't know, I could keep reading for forever, but I should stop somewhere. Like the new measures were in response to the public's strong reaction to the overzealous local officials who continued with harsh restrictions despite Beijing's orders to ease pandemic controls. So there you go. I mean, this would be positive. This would be positive for like economically, it would be positive.
Yeah, it's been interesting to watch. It's not something I've followed super closely, but yeah, there's obviously been a huge amount of pushback from people in China, and that's not typically how things have been done in China. There's been this kind of unwritten rule that the government will provide economic growth and improve living standards, and you guys just do what we say and don't push back on it at all. And recently, clearly we've seen, certainly over the last couple of weeks, a significant amount of pushback. It's been interesting to see some of the nature of some of the protests, because they're not allowed to say anything about COVID policy at the protests. So they did this protest where everyone was just holding up white pieces of paper. So everyone knew what it meant. It was kind of everybody knew that they were protesting the COVID policies, but they were doing it in a way where they didn't actually have to say anything negative about those
what
policies.
Was it like? Please restrict your soul's desire to
for
talk
freedom,
or something like
yeah,
or for freedom or something like that.
Yeah, and I saw some other protests where people were chanting positive things about the COVID lockdowns because they can't say negative things, so that they'll just ironically saying like, we love lockdowns, which I thought was a creative way for them to protest. But I mean, certainly we've seen, if you look at some footage, I mean, the government has cracked down pretty violently in some ways during those protests, but certainly there hasn't been an extremely violent response from the government, which definitely reflects a change from, you go back a couple of decades and we've seen what's happened at some of the major protests in China. So, yeah, hopefully they reduce those restrictions over time. I think it's seems to be just the way to go forward now.
Yeah, definitely. Most requirements for virus testing and the scanning of health QR codes when entering premises will be scrapped, except for those places deemed vulnerable, such as nursing homes, nurseries, and schools. Domestic travellers will no longer need to present a negative virus test or have their health codes checked when arriving in another province. So, getting there. Yes. So, with that said, Hamish, I can probably go for about another 10 minutes because I have to start wrapping up and getting ready to go for the airport. So what should you want to talk about Nintendo and Microsoft?
Yes. So,
real quick?
So Microsoft has signed a 10-year deal with Nintendo. Well, I shouldn't really say it's not a specific deal, but it's more of a commitment. So the head of gaming at Microsoft, Philip Spencer, said that the company had entered into a 10-year commitment to bring Call of Duty to Nintendo following the closure of the Activision Blizzard deal. So this is a deal that was also...
Wait, it's happened, has it?
If the deal concludes, that's the commitment. The deal has not gone through.
Right.
So so this is a deal that would go through if the Activision Blizzard and Microsoft merger is finalized by regulators. They give it the old tick of approval, and it's also the same deal that was offered to Sony. And really, the idea is to kind of just reduce the antitrust fears from regulators who are concerned that Microsoft is building a bit of a monopoly. You
see that a mile away
in the gaming space. So. Interesting to see. Sony has not accepted this deal yet. I'm sure Sony's probably trying to use this opportunity to get something out of Microsoft, given that Microsoft needs something to show regulators, particularly EU regulators are really looking at this closely at the moment, to show them that they're not going to make all of these massive titles like Call of Duty exclusive on Microsoft and stifle competition. But interesting to see them make a deal with Nintendo, which has not had the Call of Duty series for a very long time. I think they had it in the early 2000s, maybe Call of Duty 1 or 2 or something like that. So,
honestly, this is such a nothing story because no one's playing Call of Duty on Nintendo. I'm sorry, they're just not. They're just not.
Yeah.
It's so funny. This is totally just like a... Hello, I'm Phil Spencer, and I'm excited to announce some positive news that makes us not seem like a monopoly.
Yeah, you can
Did
now.
You hear that?
You can
regulators.
You can now get Call of Duty. You can get Call of Duty on your Nike shoes now.
Yeah.
We're finalizing how the hell that even works, but it's coming.
Yeah. You know, on your air conditioning unit, how you can see the screen and turn up or turn it warmer or colder. Yeah, you can play Call of Duty on that now too.
Yep, exactly right.
Play Call of Duty on anything. I mean, you won't want to play it on anything except an Xbox. We trust us with that one, but but you could play it.
Yeah,
It's like, imagine if they're just like, to Sony, it's just you can you can play. You can play Call of Duty. It's available on PlayStation, but every PlayStation player has like half a second of lag.
yeah.
So if you want to kill anyone in multiplayer, you need to play it on Xbox.
Yeah, well, I wonder exactly how they're kind of trying to structure these deals because obviously long-term gaming is going to go streaming. So it's not going to really be about what console you have. It's going to be more about who owns the IP and can put it on their own gaming streaming service. So, you know, in that vein, this is kind of irrelevant for Microsoft over the long term. Ultimately, if they can get the IP of these massive gaming studios, then they will win. It's not really going to be a matter of any 5-10 year contract that's going to be fairly irrelevant for consumers. So yeah, it really is just them trying to get this acquisition to go through, which has been pending for a very, 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 very long time now. This has been a story since the beginning of last year, I want to say. So this has been a massive. It's been a long time.
Last year?
I think
Beginning
year.
of this year, surely.
Oh, really?
I think this year. I think so. But I do think they said that they weren't expecting this to be finalized until early next year. So.
Yeah.
But yeah, I'm not entirely sure. Don't quote me on that. Maybe you're right. But it has been a long time. Yeah, there you go. Should I talk about the Tesla semi-truck event?
Yeah, so we didn't speak about that last week?
No, we didn't. It happened 5 days ago. So
okay. Yeah, you were right, by the way. It was the beginning of this year. My bad.
Yeah, all good. So yeah, there's nothing too much. I don't want to talk about this Tesla semi-truck event too much. Not a lot happened. Elon and one other guy from the company got up and did a bit of a speech on the product itself. They had a couple of skinned Tesla semis there for Pepsi and Frito-Lay as well, so that was pretty cool. It was actually a very short event. A lot of people were expecting like what they did 5 years ago when they unveiled the truck, that like the new Roadster was going to come out the back of the truck or something like that. It was nothing like that. It was just hand over a key card kind of thing. But they did talk about the truck. So it's got talked about its 3-motor drivetrain. Very cool, actually. They've got like 2 high like power motors, and then they've also just got 1 ultra efficient highway motor.
Right.
So when you put your foot down, you really need it. The high power motors get you up the hill kind of thing, but then generally they just revert back to the single high efficiency motor, which just does all of your height. When you're just going 100 on a highway, it just does that, which is pretty cool.
Yeah.
What else did they? Oh, they showed a really cool video of it hauling a full load and going up an incline and just keeping up with traffic and overtaking diesel trucks. Honestly, they said something like these, I don't know what they call them, Class A, like these heavy trucks. These are heavy trucks. Heavy trucks are 1% of US auto sales total,
right.
But they account for 20% of US vehicle emissions.
Wow. Yeah. Okay.
Yeah.
I mean, it makes
1%
sense.
of sales. But yeah, because they're just running all the time and they're always carrying heavy loads. So they're always having to pump a lot of fuel. Yeah.
Interesting.
So it's pretty crazy, isn't it?
Yeah.
So you can understand why Tesla are making the truck. I think it'll be a game changer. Like looking at this event and it's just one of those times where you look at a new product, and maybe this is an iPhone moment, and you look at it, compare, and they were comparing it to the diesel trucks. They had them there on the videotapes. They were showing it pulling away faster. It's just like, it's one of those moments where you look at the product and you're like, wow, in every way, that is superior.
Yeah.
Like it, and it's not even like, I think this is kind of how Elon works. His mind is just like, no, we can't beat it by 3% or make it 5% better. We have to make it like an order of magnitude better kind of thing. He's always thinking like orders of magnitude. So it's pretty crazy that I looked at this truck and I watched what it was doing and I was like, wow. I mean, I'm no truck guy for sure. But from what I could tell from this presentation, it looked like this is just a very superior product.
Yeah.
Like crazy. And it comes down to economics as well. So if they can hit, that's the thing with trucking. It's just economics. No one cares like what the truck looks like, really.
Yeah.
You could have the ugliest truck in the world. If it wins on economics, people buy it.
Yeah. Yeah. I mean, it's a company that's going to be buying it at the end of the day based on dollars in, dollars out. So it's not it's not a really consumer product. So, but even on the charging side, I mean, in terms of, you can make some argument that it's annoying for consumers to have to stop and charge. But when it comes to trucking, I mean, they're stopping a considerable amount of times for legal reasons when doing long shifts anyway. So
and they've aligned the range up and the drive time up with those laws. Yes. So it really shouldn't be an inconvenience.
Exactly. So it will be interesting to just to see how that plays out. Even though I guess it's a small part of the overall auto industry, as you said. It's certainly an interesting one. It gives me it's reminding me of that episode of The Simpsons. This is a Simpsons episode, right, where they have that truck and it's got that.
I don't know.
I think it's got like
never allowed to watch The Simpsons as a kid.
It was like an autopilot truck episode. I can't remember what it was. Homer's just sitting on the front on a deck chair.
Oh, right.
Something like that.
Great.
I can't remember.
That's
but
great.
Yeah, it will be interesting to see. The inside looks incredible with the 3 screens
awesome.
And
2 screens across.
having the blind spot cameras or mirrors as cameras.
Looks so good. So they have cameras facing straight down to get the lines, and then they also have cameras facing straight back on either side, so you can get the long look at the lines as well. So it looked awesome. Like I was just watching the guy drive, and it's like, this is so, because that's what I would be scared of if I was a trucker. It's like, geez, how do I keep this thing in the line? It's so big, it's massive and so long. It's like, how do I make sure I don't like get this thing out of the lane? But it looks so easy. You just had so many data inputs. He could just see like, yep, I'm all good. Yep, all good.
Yeah.
Autopilot will be great. I think it's going to be a good product. I think people aren't talking enough about it, to be honest.
Yeah.
We'll see.
It looks really good.
Anyway, dude, I better head off.
Okay.
Sorry, we wrapped this up 10 minutes early or so, but I am about to go get on a plane and go to Melbourne.
Very exciting.
I'll see you tonight, mate. Go get food again.
Yeah.
No, I'll see. We'll see what happens. I'm a bit spent. We got a big day tomorrow as well.
We'll go out and get one drink again, like we did last time.
One. Just one. Just one. Oh, just one or two. Oh, you want another one? Oh, yeah.
May as well.
Yeah, okay.
Yeah.
Oh, yeah, that was a good... let's get another one of that, right? Yeah, sure. Next thing you know, 10 beers in.
10 shots of vodka, please.
Line them up. Anyway, thanks, guys, for tuning in, as always. Sorry we didn't get to any questions, but keep them coming. Drop them in the comments section. Leave them on Spotify, whatever you need to do. Get a question in. We'll chuck in the doc and answer it probably next week's episode. But, guys, thank you very much for tuning in, and... we'll see you guys in the next episode.
See you guys.